What a time it is to be in the markets. Welcome back to Trading with CJ. The markets are going crazy right now. We are seeing red everywhere. Everything is going down. People are panicking right now because there are a lot of new investors on the scene and they may be only used to seeing green, 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 but now we have some red. People are starting to panicking. So I'm going to include this video in my Investing for Beginners series because part of investing is about having the ups and downs, okay? The market can't go like this. The market cannot go straight up. It tends to go up all the time. However, there are bumps along the way. So that is why this is part of the Investing for Beginners series, how to deal with a market crash / correction. What is my plans on this? What am I doing with my stocks? And how long I think this will potentially last. Where do I see us going in the next few weeks, next few months, etc. I'm going to give you all of that in this video. And if you appreciate that, please go ahead and smash the like and subscribe to my channel. We also have a Discord, which is completely free to join, and I post on there every single day what I am buying or selling. Okay, guys, you can join that. Link is in the description below. So let's get into it. I don't really have a plan for this one. I'm literally just going to talk to you about my strategy and what is going on in the market right now, okay? Because it's something that a lot of people haven't experienced. Let's talk about this market correction. This is currently a correction, not a crash. What we saw in March last year, February, March time, was a crash. We saw stocks plummet. Some stocks even went down 70%, 80% in one day, especially travel sector. Those stocks got hit really hard. However, every single stock on the market was down, okay? Right now, we are seeing a slow decline. We've been seeing this since February the 19th. So the last couple of weeks, we've been seeing a steady decline. However, as of the last couple of days, this has been getting a bit more dramatic. A lot more stocks are down, especially the volatile ones, penny stocks. You know, these stocks are down 15, 20%, even more than that in a single day. Big tech, they're down as well, you know, 5%, sometimes even more than that in a big day. So what was the reason for this? Well, we know the market was overvalued, okay? We're seeing stock after stock just going up. Valuations pretty much playing no part in it. Everything was being bought because it looked good going forward, okay? And people just wanted to plow money into the stock market. They were getting out of control. We knew that a correction of some sort was due. And here we have it, guys. It came, the correction came right now, and we are still under process of it. We don't know when this is going to stop. However, we can obviously predict that. We'll let you know my thoughts on that in this video, okay? The reason that we have really seen as of the last few days this properly drop is inflation rates are going up, okay? They are set to rise. Bond yields are going up as well. Now, this is not a good thing for the stock market because typically if bonds are going up, stocks are going down and vice versa. When stocks are up, bonds are technically lower. So that is the deal with this, okay? Inflation is set to rise and we are seeing this. Even the Fed came out themselves and said this. But I do want to point out something from this. Let me just quickly put this front page up here. The Fed chairman, Powell, says economic reopening could cause inflation to pick up. Temporarily. Key word here being temporarily. A lot of people are panicking right now about this because they're seeing all these big words getting chucked out there. Market crash, panic sell. Guys, you need to remember this is part of investing, okay? If you're new to investing, this is 100% part of investing. If we take you to the Dow Jones, okay? The Dow Jones industrial average right here, you can see that over the years this has consistently gone up. We can take you here to this graph which takes us back to around about 1980. Over time, steadily, it's consistently gone up. However, that is not without its dips. We can take it back. A massive dip here in 2008, 2009 area. And then if we go back to the last 5 years, you can see, obviously, we had the big crash in March. We actually saw a drop of about 35% in a matter of a couple of days, which is absolutely incredible overall right there as well. And then even throughout that last year from that, we have seen little dips here and there. We had a bit of a dip in October time, and now we are witnessing another current dip, okay? Correction. So we don't know where this is going to end. There isn't necessarily no bottoms. However, what we do know is that over time, they will recover. That's the Dow Jones right there. If we show you the S&P 500, it looks very, very similar, okay? The top 500 companies in America. Once again, dips here and there. You know, there was a little dip in 2018 as well. Recovered, gone up, dip in 2020. And if we look where we was in 2020, if we go back to that bottom of the S&P 500, we are currently up 63% since the crash level in 2020, which is absolutely insane. And even pre-crash level, we are still at this moment in time up about 11%. So it always continues to go up. It's just a matter of when. So people who are panicking about your stocks, if you are a long-term investor, you shouldn't be worried because over time you'll be fine, okay? If you are looking to make trades and short term, that's where this volatility sets in. If you are purely buying penny stocks or SPAC stocks, higher risk stocks, you are going to be feeling this a lot more than people who buy growth stocks and ETFs, etc. You know, I talk a lot on my channel about penny stocks, but I've always made it clear, okay, penny stocks make up a small part of my overall position, approximately maybe 15 to 20%, around that region. No more than 20% is in my portfolio in penny stocks, okay? So that is something to consider here. Growth stocks are, of course, getting hit as well, but nowhere near the level of the volatility. So if you're a long-term investor and you're buying stable stocks, and being diverse in your investments, you will be fine, okay? That is absolutely the case. And even if you are buying volatile stocks, if you've done your research and the fundamentals are good, then you should be fine as well. You just need to remember here, if you love a company, then do not panic sell just because you see it going down. If you needed the cash, then you really shouldn't have invested into it in the first place. You should always have an emergency fund. But anyway, I want to quickly touch on people who are specifically asking about you know, specific stocks, you know, what's happening to ABC, what's happening to XYZ, etc. Right now, as you can see, everything is going down, no matter what is going on with the company. Let's say a company has put out amazing financials. Apple, for example. Apple put out incredible financials, a solid growth stock. Apple are still down. If we take you to the last 1 month on Apple, they're actually down 13% in 1 month, which is incredible for Apple. When you look at the last year, that graph has been pretty nice, okay? Pretty green for sure. However, to be down 13% in the last month, something is not quite right there. You could say that this is overvalued with a market cap of $1.98 trillion, which is insane. However, the earnings are getting smashed time and time again. That's a high growth stock. Even penny stocks with amazing earnings. Higher Tide, one of my favorite penny stocks right there. They put out very good earnings. The next day, we saw a drop of about 19%, which is absolutely insane considering they smashed their earnings. So right now, regardless of news around a company or fundamentals, etc., it doesn't really make a difference. The stocks are going down. It may help slightly, you know, but it's not the be-all, end-all. What you have to remember here is the stock price, whilst that is, of course, the price we're buying in that company, it does not necessarily reflect how the company is doing. A company could be smashing earnings, as we just spoke about, and that doesn't mean the stock price is going to go up. You are buying here what investors are willing to pay for this company. So if a company is doing well and the stock price is going down, that could be a sign right there, guys, that you should be potentially looking at this as a potential purchase. If you love the company, they're turning around good numbers, fundamentals are good, a lot of things in the pipeline, and the price is going down, that is a potential value buy right there. You're seeing value in this company because you're getting it for an incredibly cheap price compared to where it could be in maybe a year to 5 years to come, etc. So what is my strategy in the stock market? What have I been doing at this moment in time? Well, if you're part of the Discord, you will know that I have been buying. If you like a company, let's say $500, okay, and this company drops to $400, but the fundamentals don't change, the earnings actually get better, things are looking good, then you should love that company at $400. It is a steal. If you really thought that you were going to get amazing gains when it was $500 and now it's $400, that's a sign right there that this is at a discount price. There are a lot of people out there, a lot of incredibly smart investors that are treating this as a shopping spree. They're treating this as a Black Friday, you know, a Boxing Day sale, you name it. A lot of companies right now are starting to look a lot more interesting at their current valuations, which is great. Let's take Tesla, for example here. Tesla is currently at $570 at this moment in time of recording. It may change, but $570, okay? This has dropped off insanely. This almost hit $900 just a few months ago. If we actually go back to where that was, 8th of January, this was at $880. If we look at where we are now, we are down 35%. 35% on a company like Tesla, insane. Now, you could argue that even at this price of market cap of $535 billion, it is still incredibly overvalued. However, if you were happy to buy at $880, nothing's really changed within the company, okay? Why would you not be happy to buy at these prices? So that's just something to consider there. This is not financial advice. You should always do your own research into companies. However, my thoughts here and my opinion is, if you really like a company when it was at $10 and now it's at $5 and nothing's changed within that company, then why would you not want to buy? This, of course, goes back to following emergency funds. I will have a video on this very soon. You should, of course, have emergency funds. If you do not have the funds, then that may explain why you're not buying. However, you know, if you've really liked those companies, this will recover. The market will recover. It's just a matter of when. So I have been buying stocks. I haven't actually been averaging up on anything. Even though valuations are good right now, I'm going to wait a little bit longer because we don't know where the bottom is. We're talking about Tesla currently being 570, 580, etc. However, tomorrow it might be 500, it might be 450. You don't know. That's the thing with the market, okay? Warren Buffett, as you all know, do not time the market. It's more about time in the market. As long as you're in it and you're in it for the long term, that's fine. You don't necessarily need to keep checking your stocks, okay? If you buy a stock and you love it, you can leave it in there and then check back on it and see what's going on with that company. As long as you're keeping up to date with the news and how the company's performing, you could potentially look into your account in years to come and be like, wow, this is insane. Okay, the market has recovered. I just want to show you one more thing here before I kind of summarize this. If we take you back to the March crash last year, I know a lot of investors got involved. I personally put a lot more time into the market as well after those crashes. If we take a look at the March crash from last year, Disney. I want to show you Disney. Every stock follows this pattern to some extent, or majority of them do. But Disney's a good example because it's a high growth stock. Everybody knows Disney. It's generally a solid player, right? If we take you back to that crash, we can see that around about from the 7th of February to 20th of March, this dropped down almost 40%. 40%, that is a big old crash right there, okay? And if we look at where it is now, from those 40% drops at this current price, bearing in mind we have been seeing stocks drop, we are up 117%. So for these stocks to be currently dropping, you know, that's 117%, and Disney's down about 4% in the last 5 days. So that's just something worth considering here, okay? That follows the same strategy, same pattern, you know, CCL, Carnival Cruise Lines, travel stocks, even higher growth. Even Amazon had a bit of a dip during that crash last year, about 10% I think it was, and you know where that is now, smashing those levels, okay? Every stock had a bit of a dip last year, but majority of them have recovered quite a lot since that crash. Since the crash levels, a lot of them have gone on to incredible gains. Of course, the travel sector is still massively down from the pre-crash, but if we look at where it is, let's actually just show you. CCL, for example, crashed down about 75, 80% right there, and since that level, it has recovered 114%. But even at those recovery levels of 114%, it's still down 50% from the pre-crash. But my point here is they have gone on to recover. So this is currently a market correction, but if you believe in a company, you love them, and you're a long-term investor here, you should definitely see this as an opportunity within the market. Don't be worried about these red days, okay? Because it will end at some point. My personal opinion on when this is going to kind of maybe flatline out a little bit more is in the next few weeks. I don't think we're going to see this end tomorrow. If we do, of course, amazing, but I'm not going to go all in, that's for sure, because I'm definitely holding a cash pile as well as my emergency fund. You should have your emergency fund and then a free cash pile ready to be invested, because we could see a further drop. My opinion myself is this may last a couple more weeks, and I think by the end of March we will start seeing nice green days again. I think we're going to start recovering, and in a few months' time we're probably going to forget about this crash or this correction even happened. That is my personal opinion. If you enjoyed this video, please go ahead and smash the like and subscribe. Let me know in the comments, what are you doing? Are you holding cash? Are you buying? Are you weighing it off? Or have you sold? Have you sold because you need the cash, or you're just worried about what's going on? Let me know in the comments, and as always, thanks for watching, and until next time.